Hello and welcome to Car Dealer Live. My name is James Batchelor. This week we learned that Auto Trader has agreed to buy Autorama, or more commonly known as Vanarama. The deal, which is subject to regulatory approvals, is worth some £200 million. Now, Vanarama was founded by Andy Alderson in 2004 as a used vehicle dealer before moving into B2B commercial vehicle leasing 3 years later. Now, joining me to speak more about this massive deal is Auto Trader's Chief Operating Officer, Catherine Fairs. Hello, Catherine.
Morning, James.
Lovely to always a pleasure to have you on, Catherine. Now, before we get into the nitty gritty bits of the deal, so you can just elaborate on what it means to dealers. Let's just start off with the leasing market. Now, as you know, Vanarama is obviously a big name in this space. It's familiar to lots of dealers and to lots of consumers. What is it about the leasing market that is of huge interest at the moment?
Sure. Well, if I start with briefly just Vanarama and who they are for those who don't know the business, they're a marketplace for leasing deals. So they aggregate leasing deals from different providers and funders and then support consumers to buy them online predominantly, but also through their operations team. They do focus, as you said, on this specific segment of the new car market where funders, leasing companies, OEMs look to lease cars directly to consumers. Of the 2 million or so new car and LCV transactions that we saw last year, about 150 of those were sold in this way through leasing aggregators, and Vanarama sold about 14,000 of those. So the market segment's pretty well established. And we estimated, I don't think there's exact data out there, but there's about 300 or so aggregators in the market that operate in a similar way to Vanarama. We've had, as Auto Trader, a leasing marketplace since about 2019. And we've seen a growing number of consumers looking to want to buy their new car this way. Why is that leasing segment growing? Well, we've seen it being driven principally by the shift towards electric vehicles, where consumers are, for those new cars, perhaps not as interested in taking the residual value risk, and the prospect of leasing the vehicle for perhaps 2 or 3 years is quite an attractive proposition. And that growth really in that today relatively small segment of the new car market, we felt was something that we didn't want to ignore. And so we started looking at the market to see which of the aggregators were performing well and would potentially be a good fit with our business. And Vanarama for us really stood out as having great team, great technology and great operations, specifically the investment they'd made in that online transaction capability and their real focus on the consumer and consumer experience and service meant for us that they were the clear market leaders in that segment.
Yeah. I mean, you mentioned there that you've been in this sector since 2019. Just for people to properly understand this, what is the appeal of purchasing an aggregator? Why do you need that to flourish in this sector?
Well, our proposition for consumers is led by choice. We provide trust and transparency in the buying journey, but principally consumers come to us because they get a full view of the market for both used cars and for new cars. And with this growing segment of leasing deals, we built a new car marketplace for leasing deals a few years ago. And on that new car marketplace, we allowed leasing companies, manufacturers, any funders to basically advertise their leasing deals. So we had choice across lots and lots of different providers for consumers. And with Vanarama, what we're really doing is strengthening that proposition and hoping that over time we can get more leasing companies, more funders, more retailers, more players operating through that marketplace.
So what's the long-term goal with Vanarama? Is it to totally incorporate the business into Auto Trader and the Vanarama name goes, or what's the plan?
So the team have done a really good job of building a technology stack, an operating model, and a brand that has driven much of their growth over the last few years. And we're planning to leave that team and that business as a separate entity, continuing to drive growth in that segment, because it is a specific segment of the new car market and their propositions very well suited to it. it makes sense to continue to leverage that capability and that experience that we have there to drive growth in that segment.
Obviously, a lot of people know the Vanarama name through their extensive sponsorships, particularly in sport. I mean, does that chime with the Auto Trader way? Is that something you'd probably look at reevaluating in time?
I think the team have done a really good job of building their brand over the last few years, and that has been an important part of the success. I think specifically, they've also done a good job, though, of optimizing their performance spend to drive consumers into their experience. And that's something that we're going to continue to drive and optimize, and that team have much more experience, frankly, than we have today. So no plans to change the kind of marketing strategy or approach in the short term.
We've had quite a few dealers on our forum and commenting on the website, specifically talking about the fact that Vanarama is a loss-making business at the moment. Net revenue 26 million last year, EBITDA loss of 6 million. What is it about the business that attracted you? Because obviously, that's for a lot of people, that's quite an off-putting set of figures, isn't it? So is that something you're not particularly interested in? You can see other potential in the business.
So I think that ultimately, as with any valuation, the valuation's the price you need to pay to acquire the business. The business was backed by venture capital funders, and we wanted to avoid a wider sales process and complete the acquisition quickly. The business has been loss-making for the last couple of years, largely because it's been investing very significantly in technology, in operations, and in marketing and building the brand. And the impact of that technology investment is really clear when you look at the key KPIs, because the percent of transactions that they're completing online is higher than certainly any other player we met. And similarly, the investment they've made in customer support and service really shines through in the Trustpilot and consumer satisfaction scores that we see. So I think with that investment in mind, we see that investment as having created this scalable platform that the business can now grow from. And we're confident that over time, the level of incremental investment that we need to keep driving performance will be less than has been needed historically.
Yeah. Is Vanarama number one in the market at the moment?
So they're not the biggest broker, we don't think, technically by volume, but we certainly, when we were looking at the market and looking at the different players, we felt that their technology, operation, and people capability was the strongest of the players that we saw out there.
Catherine, is this something that dealers need to be worried about? Because again, we've had lots of dealers sort of messaging us saying Auto Trader is potentially encroaching on their space. They're entering the leasing market. All of these things we've been hearing. What's your message to car dealers watching this?
Well, retailers underpin our business, and our priority is always to be the best possible partner to our customers that we can be. We place huge value on that partnership, and we don't ever take it for granted. And I think this acquisition for us is entirely consistent with that. It's about strengthening an existing proposition that we've had for a number of years in a small but a growing segment of the new car market. We're not creating a new market segment or disrupting one. We think that leasing segment that's there today will grow, and we want to be part of that growth in the future. We also, for our consumer brand and for the strength of our proposition, we need to provide choice to consumers. And without this proposition growing for us, then we wouldn't have that choice, which is so important to the reason why consumers come to us and come to our brand. And we deliberately were focused on aggregators and marketplaces because we want to maximize that choice. We need lots of different manufacturers, lots of different leasing companies, retailers, lots of players supporting and wanting to promote their proposition through that marketplace. The business works with about 150 car retailers in the UK today, and some of the retailers I've spoken to who understand the deal are interested in how they grow and build that partnership further with Vanarama. And I'm confident that retailers will see that partnership focus through the actions that we continue to take in the coming months and years.
Yeah. I mean, you've got to move with the times, haven't you? And you know, we both know the leasing market is only going to grow. It's a bit of a tricky question to answer this, I know, but have you got any sort of ideas of how much it is going to grow, and you know what potentially the share of new car sales will be leased in the future?
So it's a relatively small segment today, but it's been growing somewhere around 10 to 15% each year over the last few years. Yeah. Obviously, with the big structural supply challenges in the industry, that's impacting every segment of the market in some way. I don't think we expect a sudden acceleration in that growth rate, but we're hopeful as the supply side constraints ease, that segment will continue to grow, at least at the pace that it is growing today.
Yeah. Catherine, thank you so much for joining us today. I wish you the best of luck with it. It'd be great to catch up at a further point down the line to see how it's all going. But for today, thanks very much for joining us.
Thanks very much, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.